Brazil, #1. And I'm not talking soccer. Time for a little insight and action. Take a look at this. Brazil, #1. Highest earnings growth among the major emerging markets out there. This is based on 2014 estimates. All right, Brazil, 56% earnings growth. Got your attention? Compared to Mexico, 35%. China, I thought China was supposed to be like the next Valhalla. No, not next to Brazil. China's 26%. South Africa, Russia, Taiwan, South Korea, India. Again, the highest earnings growth of all these major emerging markets. The question is, what do you pay for growth, that 56% growth? As it turns out, not a lot. It's the third lowest, trades at about 10.6 times forward earnings. That's the forward PE ratio. Okay, I know that Russia is cheaper. That's a little, we could talk for quite some time about that. China also cheaper, trading at 8 times. We've been talking about the slowdown in China, GDP slowing down there. So, you know what, Brazil at 10.6 times? I know it's not entirely easy. Dilma Rousseff, the president, is going to be up for election in October. I know there have been protests during the World Cup, whether they're funneling money towards stadiums that should have gone to education. There's a little hair on this dog, I admit. But you know what? Trading at 2/3 where the S&P 500 is trading and growing 10 times as fast, now you got my attention. We asked Atul Lale, who runs Deltec International, what's going on here? Is this an opportunity? He says, within emerging markets, equities, short-term opportunities are now presenting themselves. Deeply oversold markets are likely to experience a longer bounce. This is what he is talking about. I'm showing you the EWZ. That's the Brazilian exchange-traded fund. And we went back to 2009. This thing has been in a 3-year downtrend. And again, this is what he's talking about, that short-term opportunity. We have finally broken above the downtrend. Again, with that kind of earnings growth, you can understand why. So take a look at Brazil. I know there's a little bit of hair on that dog, but might be worth a look. There is growth there at a relatively low valuation.